Hi, and welcome back, everyone. My name is Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management, and thanks for joining us again this week for our next week today, our live update on what's going on in the market and what we see coming up this week. As always, we do every Tuesday live, and later in the week, we'll put out a deep dive into a specific topic to help you build a better strategy, build a better portfolio. But with that, always keep in mind everything that we cover on here is for information purposes only. Don't apply any of these strategies without doing your own due diligence or talking to a professional advisor. It may not be right for your particular situation. Everyone's unique, and every strategy has its own use. If you have any questions on what we talk about today or any other topics we've covered, always go to mikeonmoney.com. There you can reach out to us, have access to our full library and my calendar as well if you wanted to have a one-on-one conversation. So with that, let's jump into things. By way of COVID update, not much more on the COVID, as far as changes going. We will talk a little bit about the new pills that are going out from or treatment pills, oral pills, I guess, from Merck and Pfizer. We'll cover that in today's conversation. We'll talk a little bit about the land borders opening and what that means and what numbers we're seeing out of that so far. But other than that, pretty much everything's moving forward as we expected with COVID-19 here in Canada and mostly around the world. So let's talk about what's going on in the economy. Coming up, we're looking at the purchasing index in the United States for October, and also, more importantly, the agricultural supply and demand estimates. So, if you're a shopper or you've heard about things, food, inflation's here, and certainly one of the areas that we're seeing a lot more people talk about inflation is around food. Obviously, there's fuel and house prices, and yes, that does, those two things will affect people differently. Obviously, home prices, if you already own a home, some people are like, well, great, it's going up. If you're trying to get into the market, of course, that makes it really difficult, but everyone has their own perspectives on those things. Same with fuel, depends on how much you drive. But when it comes to food, we're all out there eating and consuming. And we're seeing a lot of different areas move up. And I think one of the kind of most relatable examples that I've seen in the news lately is, American Thanksgiving's coming up, and they're comparing the price of a turkey compared to last year versus this year. And there's a significant difference for the same weight of turkey. They're looking at anywhere from $20 to $30 more expensive. So that's how significant we're seeing inflation impact food costs. And I only think that's going to get worse before it gets better. And we'll cover a lot of the causes and effects in today. But we're looking at those numbers coming out of the agricultural supply and demand estimates later this week. And that, I think, is going to give us a little bit more insight to how much more serious the inflation around food is going to get before it gets better. Stock futures wavered a little bit, especially in the tech markets and down in the United States this morning. And that's just a little bit, coming off the highs, all-time highs of the indexes. We don't see too much really happening to push them down. As I said, the inflation numbers are still there. Yes, the tightening, the U.S. Fed is looking to ease, their buybacks, ease the quantitative easing effects, but that's all pretty much priced in. Well, I think what we're seeing this morning, yesterday and today, is just taking a little bit of money off the table, and of course, some things going on at Tesla, which we'll also cover in a bit more detail. And of course, with that, Tesla shares, ticked up a little bit pre-market, but today they continued their fall after Elon Musk signaled he was looking at selling a big stake, about 10% of his holdings, about $21 billion in the company or in the stock price. And there's a lot more behind that we'll discuss in a little bit here. Other things going on, we're seeing kind of flatlining of participation, from the rise in wages that'll leave in the Fed in the US, well, really in Canada as well, a bit puzzled. So, we've been talking about inflation, we talk about all the tools and how the Fed was going to stave off the inflationary effects, and try not to use those interest rate, which is kind of their final arrow in their quiver, until 2023. So that's been their goal all along, and they've been managing quite a bit. They've, faced different challenges. Of course, we had the supply chain issues, but one of the big things has been unemployment. So the unemployment is still staying fairly high, while we're seeing, this inflation, but a big demand for employees. So, we've got this kind of disconnect, which is, economists will call it stagflation, but trying to get people back to work. And we are seeing kind of a surge or a lift in the pay rates and the pay scales to try to get people back. But this is their last kind of bottleneck, the last kind of, how are they going to solve for this? Because if they raise, even if all the wages raised instantly overnight, will people go back? But if you do, you're not saving off inflation. In fact, you're just increasing inflation. So it's this fine line that they're walking here between these two areas. And, and it's kind of funny, well, I guess not funny if you were in that boat, but pre-pandemic, there was a lot of push for raising the minimum wage. We can't afford to work for these wages, and you can certainly see that effect when you look at kind of what the take-home pay is, for someone even earning the $15 minimum wage, is barely enough to survive on, or keep you above poverty levels anyway. And at the time, a lot of the pushback was like, well, if you don't like it, get a better job. Well, through the pandemic, they went and got a better job. Some stats that I've seen shows of every 3 jobs that were lost at the beginning of the pandemic or during the shutdown, 2 of those people, 2 of the 3 have gone back, but not in the same location. They went on to do different work. So one of the 3, only one of the 3 actually went back to the same jobs. And a lot of that centralized around the hospitality industry, whether it be restaurants, travel, hotels. And if you've gone to any of those establishments, if you've been out to the hotels, if you tried to travel or gone to the restaurants, they're short-staffed and they're struggling. And it's a combination of low wage and also people just saying, I don't want to work in those industries. So the U.S. Fed is really, and we're using their numbers for this discussion, but a lot of that is global. They're having a hard time getting people to go back to those locations, and that's going to be a big challenge to kind of get through this stagflation period in the markets that we're experiencing right now. So I mentioned the COVID-19 pills are coming, but keep in mind, experts across the field are saying this is not a substitute for a vaccine. Yes, they've had great results, especially the Pfizer one. The Merck one's been good. I think the Pfizer numbers have come out as more effective as far as the percentage go, but both being good. In fact, I think I saw that the US just put in a $1 billion order for the Merck pills, and the Merck is certainly further along in some of their approvals in the EU. But all these things do is once you have COVID, so once you already have COVID, can hopefully prevent a hospital stay. So the odds now you got it, vaccinated or not. Obviously, if you're vaccinated, you've already got a really good chance of not being hospitalized. But if you are feeling symptoms or having harsh symptoms, these oral medication, rather than being hospitalized, your doctor can just prescribe these. You can take them at home, and on top of the vaccines, even another 90% chance of keeping you out of the hospital and keeping the symptoms and effect of the virus, minor. So great news that that's out there. Still doesn't change the need for the vaccines. obviously, because the vaccines don't just help you get better, but prevent other people from getting sick, but also keep the virus from mutating, for more variants from coming out. So the pills don't do that, the vaccine does. Higher prices spell no demand problems for Uber and Lyft. So Uber and Lyft, you know, as you would expect, shut down quite a bit during the pandemic, as people weren't traveling, people weren't out moving about, going to restaurants and things like that. So Uber and Lyft, you know, are emerging back from that pandemic, getting busier and busier. But one of the problems both the companies had was profitability, just really, you know, turning a dollar or turning profits on all those rides or on all those services. And what we've seen coming out of the pandemic is that they've been leaner, lower cost companies. You know, they got rid of a lot of extra overhead, but they've also been able to raise some of their prices without the riders either noticing or without, you know, alienating them from using the services. So, you know, that bodes well for Uber and Lyft investors and for the companies, because that's something they've really struggled with. In fact, pre-pandemic, I don't think Uber had a profitable quarter since they went public. So, you know, be able to turn that around after, you know, the massive drops in customers that they had during the shutdowns is a good kind of a silver lining to the whole story for them. In other news, you know, open for business, the U.S. is welcoming people back across the border from Canada and Mexico. So this is obviously the land borders, you know, reopened yesterday. You could fly, and of course, Canada also lifted the restrictions, saying, you know, they were discouraging non-essential travel for Canadians. They've lifted that. So all that's good. A lot of the conversation now has turned to the Canadian requirement for the PCR test. So obviously, if you travel to another country, you might require a test to go to that country, depending on which country you're going to. I think the US is in the process of lifting their pre-test requirements as long as you're vaccinated. But Canada still requires, when you return, to have that PCR test. And they can be expensive, you know, in a lot of cases, you know, anywhere from, I've heard as high as $200 US in some cases to get that test to come back. And that's for every person in your group, you know, so if your family, you know, that can add up quite a bit. And of course, if you're only traveling for a short period of time, if you're only going across the border for 2, 3, 4 days, you know, to spend $200 each to come back again can add up. So there's a lot of pressure right now for the Canadian government to lift that for vaccinated individuals. We are seeing a lot of countries, you know, going down that path now that the passports are in place. So we'll have to keep an eye on that. Right now, Canada still has that PCR requirement. And of course, that PCR requirement is the more strict one. It's not the antigen test, which some countries like the US was requiring, which is cheaper and quicker. The PCR test is the more intrusive one that you got to send off, and usually hopefully get your results within 24 hours, because they're only good for 72 hours for travel. So anyway, that's what's going on as far as the US border. We have seen, you know, kind of when they first opened, there were some lineups at the borders for people to get across, but not as much as everyone expected. There is you know, as I said, a lot of hesitancy because you do need that test to come back. So I think a lot of people, unless they're going for a longer period of time, maybe a week or so, they're really not thinking about driving across the border anytime soon. U.S. consumers' income and spending expectations is reaching an 8-year high. So, you know, one of the things that they look at in the economy is what people are expecting to spend over the next year, and also how much they expect their income, you know, stay the same, go up, or go down. So it's pretty bullish. You know, obviously we're in that inflationary period, incomes are going up, and people are expecting to spend more, but most of that spending, you know, they are targeting towards, you know, not requiring goods, not staples, but, you know, consumer goods. So, you know, all in all, we're seeing, you know, pretty optimistic spending habits over the next 12 months. Also, the whistleblowers, you know, our fear of losing, you know, funds to key enforcement of the U.S. vaccine rules. So, you know, workplace whistleblowers and fear of losing your federal funds are really pushing people to get their vaccines in the United States. and even here in Canada more. And so it's not as big of an issue here in Canada because the vaccination rates are really high on their own. There's obviously some pockets that are lower, but in general, Canada's done quite well on a global basis. In the US, though, as we've all seen, it's been pretty politicized. Depending on the state you're in, the vaccination rates are higher or lower. But despite a lot of talk about, hey, I'm not going to get it, I'll quit, or they'll have to fire me, or for the most part, we have seen a lot of spikes in the vaccination rates as the U.S. administration put these requirements in place. So good news overall, as far as things reopening as seamless as possible. Of course, none of that has happened without hiccups or without pockets of problems, and we'll probably continue to see that a little bit as things move forward. Biden's top team is going across the United States in a victory tour over their $1 trillion infrastructure bill. Honestly, kind of done with this story. This is one of these things that have gone back and changed a million times. Everything has changed from the beginning. It started just over $3 trillion. Now it's $1 trillion. Some things were taken out, some things were put back in. Anyway, it's great that they're getting this done. Obviously, it's been a political nightmare for the Democrats in the United States to not be able to get this thing through because two of their senators wouldn't agree to it, or sorry, two of the senators wouldn't agree to it. Anyway, it's done. Hopefully the story's over and we don't have to talk about it anymore. There's no more hiccups with it. So with that, let's take a look at what's coming up this week in the news. Coming up, of course, the Fed chair, Powell, is expected to give an open remarks for it's a virtual conference, but to the Conference on Diversity and Inclusion. I mentioned a couple of weeks ago, the U.S. appointed for the first time, a minister for inclusion and economics in finance and central banking. So Canada, England, the European group are all getting together to kind of talk about that. And Jerome Powell is going to start things off, and it'll be interesting to see kind of what the plan is and how they're going to apply and build that out for the future. Labor Department is also scheduled to release those mentioned, the producer prices data. The PPI is likely to have risen slightly in October. So again, nothing unexpected coming down that road. And time to talk about those gig companies. DoorDash is expected to post their earnings. It's expected to be another decline in their quarterly revenues. And this goes back to the labor shortage, just having a hard time trying to find drivers. Of course, during the pandemic, these things boomed. DoorDash, Skip the Dishes, all those types of food delivery services where people, people were out of jobs. They were looking for short-term work. They were looking to get paid, and people couldn't go to restaurants. So all these things were doing super well, doing the takeout services. Now, those people are finding jobs. Again, pay versus convenience. People are taking, career paths that are outside the delivery services, and that's really hurting as they're having to pay more and more to get drivers to stay with them or join on. So again, this is all going to come down to that fine balance we talked about earlier today. Also coming up this week in the U.S., Tesla shares have eased since Musk tweeted out about whether or not he should sell 10% of his holdings to pay off his taxes. So this is actually a really interesting story to me. Elon Musk is always out there, tweeting things. Maybe he should, maybe he shouldn't, but he, out there tweeting things about the stock prices. So this is all going around the rhetoric of taxing billionaires. So of course, it's been in Congress about bringing in the billionaires tax, or taxing the rich. Elon Musk has been very vocal about, hey, don't do this because I'll have to, sell stock off, or I'll have to do this, or I'll have to do that. So he put it out there saying, okay, well, if you want me to pay taxes, do you think I should be paying the taxes? I'd have to sell 10% of my holdings. Do you want me to do that? And people on Twitter said, yes, you should. So this is, of course, caused a bit of a downturn. The stock's off about $100 today, so about 9%. It's still trading about $1,000 US, but this this is great because Elon Musk, who really doesn't have, he's worth billions and billions of dollars, but all his money's tied up in stock. So where he gets most of his spendable cash is borrowing against that stock and paying interest on it. So this gives him the ability to sell off stock without seeming like he's selling off stock at an all-time high in the stock price in order to pay off some of his personal loans. And yes, he might pay some taxes along the way, which is great because everyone should pay their fair share of taxes. But the way he positioned this was really interesting, and that's why we're seeing that slide in the Tesla stock price over the last couple of days. It's been around him potentially dropping $21 billion of stock onto the market. Obviously, be done in a controlled manner, but still, it's a lot of volume to put through the stock market for Elon Musk. On the flip side, talking about M&A, since this whole thing happened, mergers and acquisitions, well, the Advent Group is out there taking Mcafee private. So Mcafee, if you're not aware, is a cybersecurity company. They're looking to take it private in a $14 billion deal. Mcafee has been a very controversial company, mostly due to its founder, which I'll tell you, just go Google it. It's a really interesting story about, when he sold off the company and what he went and did after that and the controversies he got involved in with. But they're taking the company back private again and will likely restructure it quite a bit, to take advantage of the massive growth that we're seeing and obviously cybersecurity spending around the world. We've been talking about for a while now, kind of around the tech rules for companies. We've seen antitrust laws being drafted in the United States. We've seen EU and in the US states taking these big global tech giants to court over how they handle their data, how they handle fair competition. And the EU is beefing up their tech rules that could become the global standard. They've often been leaders. The EU has often been leaders, especially around the kind of tech industry in putting different rules in place. And this is mostly targeted around kind of the illegal or misleading online content that's become a big problem. Obviously, Facebook at the center of this and the recent whistleblower testimonies that we've seen from Facebook in both the US Congress and in front of the EU lawmakers. So we'll look at seeing all the details of these new rules because I think a lot of countries are looking at this and saying, hey, if that looks good, we'll copy it or minor tweaks to it, but that might be the new standard for the tech companies operating globally. As I mentioned, Merck and Pfizer both have their oral pills out for fighting the symptoms of COVID after you've gotten it. Remember, it's not a prevention. It's not something you want to go buy and take ahead of time. It's not how these things work. Certainly the early results we've seen from Pfizer and Merck, Pfizer's slightly ahead, but I suppose if you're laying in a hospital, you're not going to complain that Merck's not doing as good a job as Pfizer, but they're both there. Pfizer's just moving towards their approval. Merck went in for the approval a few weeks ago, so they're ahead of them, especially in the EU. I think the EU is pretty ready to approve it, the US as well. But both these things are great news. As I mentioned earlier, it doesn't replace the vaccine, and they're not a cure, right? Keep that in mind. This is not a cure. These things, and I'm not an expert, but what I've read, these things help prevent the more severe symptoms. And keep in mind, help prevent doesn't mean it stops, just help prevents. It is one more tool in the doctor's kit to help us get through this and alleviate stress on hospitals, especially the ICUs and ventilator systems. Also on the M&A front, Viasat is looking to buy its main competitor, one of its big competitors, Britain's Inmarsat for $7 billion. So these two companies, just broadening their offerings around satellite and land-based communications as, the demand for moving data around the world faster and faster and more data becomes a bigger and bigger market. So more M&A in that front as well. As far as currencies go this week, The upcoming U.S. inflation reports could fuel some speculation that the Fed is closer to raising rates, but so far all they've indicated is they're going to ease back the bond buyback program into 2022, which will put more pressures certainly on the bank rates, but not necessarily raise the discount rates from the Fed to the banks. But that could potentially lift the dollar if the outlook changes from where we're at right now. I think right now, though, we're mostly priced in. This is not I don't think, overly concerned, as we look at the bond yields are also kind of showing, no, this is the bond yields are kind of edged lower, basically signaling, yeah, this is what we expected. Everything's, there's no big surprise out there, or we don't see a massive switch in momentum. So all on that front, yes, it's still a concern. Yes, it's still a going, indicator that, things could ramp up in the future, but not faster than before. And of course, everyone's going to make me talk about cryptocurrency because Bitcoin rose 2.8%, so a record high, just under $68,000 US. Mostly fueled, I talked a couple of weeks ago, mostly fueled on that new futures marketed, so be able to buy on the market in your portfolio, but marketed futures fund that you can buy futures on the cryptocurrencies. And some more money flowed into it, and given the limited supply, anytime you have more money inflow, supply and demand, just as it goes up. So we're seeing record highs there. Ethereum also making a big move, another cryptocurrency. I've done a whole video on the types of cryptocurrencies. They're not all the same. I suggest you go look at those if you want to learn more about Bitcoin or Ethereum or any of the other ones, or sorry, any of the other major ones. I don't cover them all. But also, I will point out, I mentioned last week, there were a couple of rug pulls. So that's what they call when, scams are done on crypto, where they get people to buy into a crypto, whether it be a new one or through a platform, and then they just take off with your money, and you're left with nothing. So there's one in the hundreds of millions. There's a couple in the tens of millions, 20s of millions. There've been quite a few in the last few weeks. So again, just if you are going to invest in cryptos, know what you're buying and know where you're buying, right? Really know your platform. I don't have a strong recommendations because I don't invest into it, but I'd stay with a proven long-term platform. I always kind of mention PayPal. I've never actually gone on to see how PayPal does the crypto transactions, but PayPal is a well-established money payment company with a long history. So they're not going to rug pull tomorrow and disappear. So but look for something similar to that. I'm not recommending PayPal. Look for something that you have confidence in. So I mentioned the bond yields edged down a little bit due to the recent volatility. But when you talk to the major bond managers or fixed income managers, they're still looking at the interest rate hike for the first quarter of 2023. It's a lot of pressure potentially to do that a little bit earlier in 2022, and that's what we have to keep a close eye on. On the oil front, it's been a little bit of a ride. As we've been talking about, we are in a bit of a pinch for the supply and demand on energy and oil specifically. We saw oil kind of top up near 80. They go down closer to into the high 70s, and then back up to kind of almost 90, down to the high 70s. Back up to 84 range and kind of back down to 82, 83. So it's been moving around quite a bit. We do expect we are an upward trend for this week, so keep an eye on that. Certainly when we look at the producers like Suncor and Exxon and the others, Suncor and Exxon are kind of our two main ones. We've seen massive runs in both of those. We just actually trimmed a little bit off our Suncor after it had a couple of week run of 30%. Never be shy about taking money off the table when you've made some money. So we didn't get out of Suncor, we still hold it, but we did take some money off of that one. So, don't be shy when you're going into these good times in some of those positions to take profits. You're never going to pick the very high of a stock, and when you sell, and you're never going to pick the low of the stock. When you buy, you might get lucky every now and then, but for the most part, don't be shy of taking some profits off the table on that front. Gold wavered a little bit after hovering near its highest point in just over 2 months. It's just over 1,800 an ounce. Basically looking at those inflation numbers, slight weakening, in the last couple of days, but for the most part, it's been holding in there. Gold's not going to, we've been talking about gold since the beginning of the pandemic because inflation's been a concern since the beginning of the pandemic. And we're really not going to see that move. I mean, it's been holding in great because we do have inflation, but probably not a strong move up until we start to see the actual interest rates move and some weakening in the equity markets. With that, that's the end of today's discussions. If you joined us live, thank you very much. If you're listening on the podcast or you're watching on the video, go to mikeonmoney.com with any of your questions. If there's a topic you want us to take a deeper dive into, go there and send it to us. Anything at all, reach out to us. Happy to hear from you. Hopefully you're having a great week. If you live in the Lower Mainland, certainly in the North Shore where I do, hopefully your power's back on soon. I know my place lost power in the middle of the night last night. I don't think it's going to be back on until 4 due to some high winds last night. So hopefully you've got power and you're not watching this on an iPad that's about to die. But with that, I'll leave you again for this week and look forward to talking to you next week. Take care. Bye now.